Palantir is one of the best performing AI stocks in the market this year. It's already up 130% in 2025. Investors are looking forward to 2026 and asking me, where do I think this share price will be by the end of next year? I'll answer that question in this video. Now, I also need Palantir's forward price to earnings ratio. And I also retrieved that number from fiscal.ai, and they're trading at a forward PE of 189. It's down from over 250 earlier in the year. Remember, I was talking about how unsustainable that forward PE valuation was. That was more than 10x the valuation of the average stock in the S&P 500, and unsurprisingly, that valuation has come down to 189, something I predict will continue throughout 2026. So now that we have the estimates that we need, we can go ahead and jump into the scenario analysis. So I'm going to keep Palantir's 2027 earnings per share constant at $1.40, and I'm going to look at 4 different scenarios with the forward PE valuation compressing. And if it stays at 189 and the EPS remains on track to hit $1.40, then the share price could rise to $265 by the end of next year. However, I see this as the least likely of the 4 scenarios I've calculated. More likely, I think, is that the forward PE multiple continues to compress, and if it declines to 150, then the stock price will rise, but to $210 per share. If the forward PE declines to 125, then the stock price will be relatively flat at $175 per share. If the forward PE declines to 100, then the share price could actually decline to $140 per share. Now, just because these are the 4 scenarios I calculated doesn't mean these are the only scenarios possible. These are just the 4 most likely scenarios I envision for Palantir next year. Some of the bullish sentiments for Palantir next year will be the company's continued excellent revenue growth and increasing in its backlog and expansion with enterprise customers, which Palantir has done an excellent job achieving. This business deserves a premium valuation because it is a premium business. Revenue growth is accelerating, profit margins are expanding, cash flow from operations is excellent, the balance sheet is pristine. Click the link below to watch the full video.